Welcome folks, taking a look at gold on a higher time frame for our weekly analysis video to kind of gauge where this market might be heading into next week. A little tricky next week, okay? We do have this bearish candle on the daily chart. I'm looking for 2620, okay? Now that is not a trade recommendation, that is for you to monitor price action and learn about how price moves, okay? It's all about learning how to read the tape. I'll talk about why 2620 in a moment, but it is tricky. It's not going to be an easy week in my opinion. So we need to kind of look at the news calendar and align our setups according to the days on which they will be injecting volatility into the markets. Okay, we'll come back to this daily chart. Let's have a look at a weekly chart. Okay, we've had 3 weeks of bullishness. So momentum is definitely to the upside, but I think the market is desperate for a pullback. Okay, so I do believe a pullback is coming up next week. Now, a lot of this bullish momentum is based on fundamentals as well as technicals. Okay, so the reduced interest rate cuts have pushed gold up, and the slowness in the US economy has also pushed gold up with a weakness in the dollar index. Okay, I don't look at fundamentals, I just have them in the back of my mind. In my view, everything on the charts paints the picture. Okay, now I think that we kind of need a pullback back down in this week. Okay, so somewhere back to the open of the week, right, down at 2620. Let's first look at a couple of things. Okay, so I think this will be easier to discuss on an hourly chart. So on an hourly chart, we've taken all this liquidity, okay, and we have come into this down candle, which is a mitigation block, okay, and we've rejected from there. At this point in time, order flow is bullish, okay. We have had this move down, so this is why it is a little tricky, because we have our bearish order block move down and taken all this liquidity. But I do feel that we will head higher into early next week, okay, prior to coming down, if we come down, right? I'll tell you what we should be looking for, indicating further weakness. For now, we've come into this mitigation block on the left-hand side, from where we have found some support, and order flow in my view right now is bullish until proven wrong, okay? So that level, if I jump down to a 4-hourly chart, is also the midpoint of this fair value gap, okay? So you can see how well that midpoint aligns with the hourly mitigation block. Okay, so we do have some confluence of support there. And on the daily chart, that is also IOFED, right? Institutional order flow entry drill. There's our fair value gap. You can see under the fair value gap, we've got a move down and rejection. So we have a lot of confluence at that level where we have rejected from. Let's measure the midpoint on this daily fair value gap. And you can see we've rejected before getting to the midpoint of the daily fair value gap, and we have rejected. We've gone back up from there. We haven't touched it. Okay, to me that's bullish. So that's why I say the market is a little tricky. I think probably first half of the week we will kind of move up, okay, into some level of premium, and then maybe Thursday, maybe Wednesday, Thursday, or even Friday, we may get a pushback down through this. I do believe this will be taken next week, this low, and either we'll close this fair value gap or come into this week on this daily chart. I'm looking for 2620. Why 2620? A few reasons, as we've already noted. I think we need to come back down through here, close this fair value gap, okay, and push a bit lower into this week here. And on a 15-minute chart, we can see some equal lows, okay, on a 15-minute chart, right there, okay? So I'm going to put a line there and just keep that on, right there. So, oops, this one. That is coming in close to that 2620, right? So I think we will take out those lows. Now, that doesn't mean Monday morning be short. No, because of the support that I've just mentioned. Hourly support, okay, for hourly support and daily support, right, that they're going through. If you've missed that, go back and rewind and look at that, because those levels are discount pricing at this point in time. So I'll be watching these levels early next week. Okay, these are all buy stops up here. Okay, so I'll be watching that. And something I've mentioned many times in the past is having the directional bias is really just for guidance. I have that in the back of my mind, but ultimately I am trading my setups. Okay, I'm not looking to trade just in that one direction, right? It is these setups that's important. So for example, in my trading last week, done live, right? You can go back and watch all the videos. I just, let me turn these lines off. Took a short, right? Market maker sell model short on Thursday because I had the short setup, and I had multiple shorts down, and on Friday I took the long because I had a long setup. Okay, so I'm always trading my setup. I know what I need to see to enter the market long or short, and that's what you need to learn. Okay, so the directional bias is just for guidance. Okay, and we did have a short, for example, we had a short setup later towards the end of the day, which I did not trade, but there was a setup there to trade short, right? So there was a setup to trade short on Thursday, there was a long to trade long on Friday, and there was a short to trade short Friday later in the day. They are all distinct setups. So I can trade either side of the market so long as I get my setup. And that's why it's so important to learn what you need to see to identify your setup. It needs to be a certain setup that you know, that you've practiced, okay, and that you identify at the right time, because timing is more important than anything else, okay. This bearish setup, you can see we have 2 up candles, which is a bearish order block, 2 down candles in that swing low, that the other bearish breaker, okay, and we go through there. So any push up into that bearish signature is a potential repricing lower. Target would be some of these lows, right, low the previous day, or swing low on the left, or coming into some discount, which is a fair value gap to balance a level of inefficiency. So there's setups on both sides of the market, regardless of directional bias, okay. So when I talk about directional bias, that is just something I keep in the back of my mind, but ultimately I will be trading my setups that I know and have identified with experience at the right times, and that's what you need to learn, okay. So I think final thing I'll say is that for me to be interested in shorts, either I need to see some kind of a reversal around these equal highs. I'm calling these equal highs because each high on the left is higher, making it low resistance if the market starts to reprice higher through there. The market needs to grab liquidity on the way down or up. So this move up has grabbed liquidity right down here. Obviously all this liquidity as well. Okay. Now the market, prior to coming down, needs to either get up to some level of inefficiency. I don't see any here on a 15-minute chart, or go up and grab some liquidity before coming down. Therefore, I need to see that. It needs to be at the right time and needs to show me the right setup for a short. So I want a short up here at premium. I don't like the short continuation. Continuation would be, if we go, let me jump on an hourly chart. Okay, continuation would be that we head up and then we come down and break this bullish signature. Okay, we go below this mitigation block. Therefore, that mitigation block would be inversion, and we treat that as a premium. If we come down and come back up to it, then that would be premium to short into 2620. That's kind of, I don't like to trade continuation. I like to trade reversal. So if I'm looking for short, I want to see it up here. Okay, but some people will prefer to trade the continuation. Continuation means that we've come down, push back up into some premium, which would be this mitigation block when we're below it. That should act as resistance. Maybe this fair value gap can be used as an inversion fair value gap, and you trade back down from that premium. That would be premium when you're below and it's pushing back up. That is what I call continuation to the short. I don't like to take continuation. It's valid, and if I want to, I can. If I miss a reversal up high, that's when I would look for continuation. Okay, so right now, I believe order flow is bullish, and I'll be looking for continuation to perhaps these equal highs. Again, not a trade recommendation. Your job is to learn, watch, monitor. Okay, and I think if we get a reversal from this premium pricing, that will be the ideal level from where I want to see repricing lower after seeing my bearish signature at the right time in the right session on the right day. For me, reversals that I like are on Wednesdays or Fridays. Okay, if I miss that reversal, I'm not watching the market, or it's not at the right time, and we're down here, then I'm going to be looking for this mitigation block to act as a premium. I want to see bearish signatures after the market's pushing back up into that zone, right? Sorry, you got that. Let me mark it out here properly. That entire candle is our mitigation block. Okay, that smaller highlight is the fair value gap on the 15-minute chart that I walked through earlier. Okay, so as I said, if the market moves down, then pushing up into this would be a premium, or this fair value gap on this 1 hour chart can be used. This one here can be used as an inversion fair value gap. That would also be premium. Okay, so once we get through there, then that zone of pricing should act as resistance. That would be a premium. To short into discount would be these equal lows. Again, not a trade recommendation. Okay, you're learning about price action on this channel. This is how you learn. Watch it, monitor it live. See how this pans out. See how does price behave when we go through this level. If we go through that level, coming back up into this, what time is that occurring? What session is that occurring in? What day is that occurring on? That's what you need to be learning so that you can journal that. Then you know in the future if it's doing the same thing at the same time, right? At the same kind of bearish signatures on the same types of days. Okay, so that's what I'm looking for. It's a bit mixed, but again, that's why you need to know your setup so that you can identify where repricing is going to occur from and where is that repricing going to, higher or lower. Okay, so I'll be trading my setups regardless of directional bias, as I have continued to do in all my trades. Directional bias is something I just have in the back of my mind. All right, I believe this is a draw on liquidity, but I also know they're going to manipulate up and down, and I can take advantage of that if I see the setup. I can trade up or down, just like I showed you earlier in this video. This move on this 15-minute chart, this move up that I traded on Friday, okay, my drawing tool's not working, so I can't draw. This move here, but the video's there, go back and watch the video. This was a live trade execution on TradingView. This entire move up was the manipulation for the move down later in the New York session. So I can trade either side, right? There is a setup here under these bullish, under these bearish order block and bearish breaker. There's a setup there. Study it. Look at these candles pushing up into there. Have a look at what time that is. Okay? So I hope that video is useful. I will now talk with you in a future video.